Hello traders, how are you? Vladimir here, and this video, recorded video, is a very special video from my point of view, one of the most important videos in cycle trading, which generally means in the entire trading because cycle represent the best way, the real money flow in the market, and accordingly the impact it has on the trading itself and the decisions that we do. So this video would be the roadmap in cycles. I got a Russian arrow, right? Roadmap. So basically, what's going to happen in this video, we will cover the few steps we as traders have to ask ourselves on every single stage. What do we have? What do we have? What do we deal with? And how it will or will not have an effect on us. And basically, it's very important. Why? So we know the decisions we make, right? We need something to rely on. So we need basically tools to give us confirmation for direction, validation for direction, and invalidation for directions. And that's where the cycles come in play, and that's how we decide what do we trade. So what we will see today would be one of the things. Okay, the roadmap. And we will also discuss about these principles: 3 steps trading, level confirmation, setup. They too are very, very important for the cycles, and I want to cover that today. So the first very important thing that we have to ask ourselves always, and I just want to be very clear with something. I'm going to talk about the weekly as the first step to any decision of mine, but it could be applied to anything else. So basically in cycles we define directions first of all, and then we trade these directions. Think about it like something you do in life, right? You plan yourself your direction for your life. You want to be a lawyer, you want to be a doctor, you want to be whatever it is. So you first of all define your direction, understand what is going to happen with you, with your life, with your own career and your own things, right? Then you choose yourself the journey, then your steps. And that's the same in trading. We first of all decide for a direction, and then we decide how we're gonna do that, and with what tools we're gonna do that, right? And that's why I present a weekly cycle as my first step, because that's where the big money flow is, weekly and monthly. That's the same chart. And then we drop lower, and we see where do we stand. And according to that, we decide, okay, so what's my next step? But that could be applied also for, let's say I'm working with weekly and then I go to daily to decide what I'm doing in every single step, bullish, bearish. It could be daily and 4-hour combo, or 4-hour and 1-hour combination. But you have to understand that the higher the time frame that the reliability for that is much bigger, and the bigger the money is involved. For 4-hour and 1-hour combination, you understand that this is much riskier, because there could be situations that you still go against the bigger money. That's why I prefer to start from the very big picture, but it could be done with lower picture. Basically what we do, we need two following time frames in order to decide in what conditions do we stand. What is the bigger time frame, what's the next time frame? Once we have, there are only two situations. They both say the same, or they both say not the same, right? The opposite. And that's what could affect us on long-term trading and short-term trading, and everything would be explained today. What I do ask from you, if you watch this video, there are 3 cycles webinars inside the media zone, and that of the Traders Academy Club. So inside the media zone, I would suggest you to watch these webinars. So go to the media zone inside the Traders Academy Club, and choose for cycles, part 1, part 2, part 3. So you have to understand the full theory of cycles. This video is the roadmap, assuming that you already understand the basics of the cycles. Okay, and I'm not going to explain the rules of the cycles here, assuming that you understand them and you watch the other videos. This roadmap should make the entire situation simpler for you. So we start with weekly, and we ask ourselves on every single step, we ask ourselves a question: where do we stand? Do we have the conditions? Weekly could be any of these two scenarios, 1 and 2. It could be an ending cycle, or it could be a developing cycle. That's all. Yeah, it could be range, but range normally is a part of something, or developing or ending. So it's both scenarios would apply here. Ending or developing, game over. You see how simple it is? And then you ask yourself a question. Okay, so I define the weekly and define the daily. It's my next step to define the daily. I'm asking myself, is my daily with the weekly? So they basically show the same, or is the daily showing completely different from the weekly, right? And on each of the cycles, if the weekly is ending or developing, I ask myself these questions. When I got my answers from here, my decision is simpler. If they both in the same direction, I can trade for long targets, try to catch the big fish. If they don't, then I have to be very careful and trade for shorter cycles. Okay? Of course, when they both in the same direction, it's much rare situation than they both show different things. And that's why to catch a big fish is much more rare opportunity than to try to trade the short term. Okay? Because the big moves, the big fishes develop in longer time, longer periods. So I'm not going to waste your time here on this thing. I'm going to take you exactly to here and start talking to you immediately on live charts. What does it mean, ending cycle? We have few cycles. We have double, triple, or special. Right? That's all. Yes, we have a range, but range is only corrective cycle or ending after each of these stages. So it could be, range could appear, let's say, here or here. And according to that, we decide what's going to happen next. So ending cycle means that the weekly cycle did double cycle or did triple cycle or did a special cycle. Once we have this understanding, we can start saying, okay, so what's next then, right? And according to that, we can say if it's an ending cycle, we are looking for reasons for a reversal. Okay, that's all. Now, if it's ending cycle, how do we know if cycle ends? Now, I show it in monthly. Weekly and monthly basically represent the same. Sometimes, like in this example, silver, the moves would be very ugly on weekly, and it will be much harder to define it, right? So we can just go to the weekly, to the monthly. It will be a bit clearer. That's the entire idea behind doing that. So when we ask ourselves our questions, when we have ending cycle, in this case it's a special cycle. The only two ways that cycle could end is if we have false breaks and convergence. That's all. It could be on the same time frame, on one lower time frames, or maximum two lower time frames. But basically, from the cycle we work with, let's say the weekly, we can find the ending reasons on daily or the 4-hour chart. That's all. We cannot drop lower. If our cycle is daily, we can work with 4-hour and 1 hour. So basically down to 2 time frames from the cycle time frames. That's what we need. In our case, we had one false break right here, another false break right here. There was divergence. Divergence is a must in cycles, but that's this part you already have to know. We had 2 false breaks and convergence by creating higher highs. From this moment, I know that my cycle ended and now I am looking for a correction. From this moment, right, all until this moment, it was ending cycle, right? So it was, I had a level, I had a confirmation of divergences. I was looking for this long-term setup to develop. So all this part was ending. While it was ending, I didn't have any reasons for the long term here, right? I do have them after I got the convergence. And this is where my ending cycle that reached that was special, ended, created higher highs, game over. 2 false breaks, higher highs, game is over. I'm now on developing cycle. Developing could be also corrective, which means I expect this special cycle we had on the weekly to be corrected to 38 or to 50%. That's all. That's what it means. And that means, in simple words, as long as we are above this bottom, the bottom of the weekly cycle, we are looking only for buys. So according to that, we make the decision, because now I know that it was ending, now it's developing or correcting, it doesn't matter how we name it, how we call it, and I expect it to go to here. That's the first step. I decide where I stand with the weekly. Once I know where I stand with the weekly, my question is the daily. What do I have on the daily? Do I have reasons with the weekly or against? What does with mean? I know I want to buy on the weekly. So I ask myself a question. Where do I have my buy reasons on the daily? When I have an ending cycle for daily for a bullish direction. So this is a double cycle, bullish directions. I know I will be looking for buys. This is a double cycle, bullish divergence. I know I will be looking for buys. In this case, right here, I had a double cycle up with bearish divergence, and here the daily is against the weekly, because with weekly I want to buy. Here what came? A bearish divergence, so I want to sell. And that's where short term and long term becomes in play. If the daily and the weekly are together, we can aim to possibly catch a big fish. Not necessarily it will start right away, like this was a double cycle here and didn't start away right away, right? Then we had another push, and then boom, the big fish came. 2 waves, boom, big fish came. Maybe here also a big fish will come. Not necessarily it will happen right away, but when both higher time frames are together, that's where our big possibilities come in play. Okay? And this is how I ask myself, weekly and daily together or not. If they are together, now weekly I know I want to buy, daily now matches that. It gave me a reason to buy. What is a reason to buy? That the daily has a corrective cycle. So basically daily doesn't have, let's say, bearish divergence or ending cycle like here. It was a double cycle, bearish divergence, time to be careful. Maybe we're going for correction. But I want the daily to be with me. What does it mean to be with me? A corrective cycle. Now corrective cycle could be 2 waves or a range. In that case, that's 2 waves right here. It's big range right here, right? So both situations are definitely together with us, but corrective cycle on daily could be 2 waves down or range. That's all. No other option. And that's what I want to ask myself. Do I have 2 waves down? The answer is yes. Perfect. I have weekly up, daily up. Party is ready to begin. We now start looking for possible buys. If the daily is against the weekly, then I say, okay, from here I have to be careful, because there is a good chance we are going for correction before any other buys. Okay? And this is how I know, weekly and daily. I have it clear or not clear, together or separately. Each of them on the same direction or against each other. If it's together, what I do next is I go to the 4-hour chart and or 1-hour chart. Why 4 or 1? Because my cycle here are weekly and daily. They are together in the same direction, right? And that's why if it's weekly cycle, I can work with the 4-hour chart. If it's daily cycle, I can work with 1-hour chart, right? Down to 2 down to 2 lower time frames. And I ask myself, do I have a false break and convergence? Right? Do I have it here? The answer is yes, I have. Convergence principle, because we don't have here a positive, negative, positive, but it's in the cycles video, so I'm not going to waste your time. Which means I can start looking for the buys. On the 1 hour chart, it will be much clearer here. It's a classical convergence conditions, which means buy retraces. As simple as that, right? Same was in this situation on the previous move down right here. False breaks, convergence, buy retraces. So we have the retrace, we're looking to go and buy. That's all. That's what we do. That's all. Now what we need in that case is a false break and convergence on a 4 hour or 1 hour chart, or if we don't have false break and convergence, we need 3 little waves up, 2 little waves down, and breakout. That's the only 2 ways that we know with big reliability that we have the conditions to go with the cycles. Okay, that's what we do. And then we start to aim the targets. The first target would be, of course, according to the daily cycle, the most recent cycle. So basically here, right? If it was a range, then the top of the range. And the next target would be according to the weekly cycles. Okay? So that's how we know short-term, long-term targets again. What do we do if we have weekly up, daily down, like we saw right in this case? Then what we do is we check out the daily here has a double cycle. We drop to 4 hour chart. We check if we have opposite signs against us, which mean 2 false breaks. 2 false breaks against us on 4 hour or 1 hour chart. And we figure out that we have a false break here and we have a false break on the trend line right here. Then we got a convergence. That means immediately that there are conditions for the correction, short-term correction, because our weekly is still bullish, right? But it means we can short-term look to sell. Sell until we will get 2 waves down or a range on the 4 hour chart or the daily chart. Once we get it, we can start switch again with the weekly direction. That's the entire situation what we have here. Okay, we ask ourselves the questions. With the weekly, perfect. Against the weekly, okay. And every single step we choose what we're gonna do. Let's take more examples. OZ dollar, double cycle down on the weekly. Well, weekly and monthly is the same, right? Bullish divergence, so it's an ending cycle from this moment, right? Ending cycle means I need a false break and convergence. I got a false break here, I got a convergence here. Oh ho, we are bullish, right? We are bullish. Now, we know that from this moment we are going higher. How much higher? All the way to the 38.2, or maybe even higher, right? But this is our target. What do we need to be careful from? That developing cycle must be in one of the 2 options. Developing cycle should be 1, 2, 3, 1, 2, and another push, or special correction and another push, right? But this is a developing leg. This is a developing leg. When it comes like this, 1 range, 2, that's a warning sign, because that's a situation that could be just a corrective cycle to something bigger to be created. But as long as we have our trend going up, and as long as we don't have lower lows, the trend remains bullish, because we still can go and get 1, 2, 3, then 1, 2, and bigger push, right? And that's why we remain bullish in that conditions, right? Remember, let's do it simpler. It was an ending cycle down, which started to be a developing cycle to the upside after a false break here and a convergence, right? then we are looking for buys and buys only, according to that, right? But we want to see developing cycle, which means we have to see 1, 2, 3. Did we have 1, 2, 3 on the weekly or the daily? The answer would be no, we didn't. The only place where we did it, it was right here. 1, 2, 3. That's where we got our super duper high confidence that we are going up. And after this correction, we started to look only for buys. And we still do. Okay? But then what happened was that the second leg up was created. 1, correction of a range, 2. And that by itself now could be a corrective cycle. So we enjoy this big cycle, and we still enjoy it as long as this trend line holds and as long as we don't have lower lows, right? To switch the momentum. And here are our decisions. So we want only buys. We drop to daily, and we always want to ask ourselves, are we with the weekly or against the weekly? Now I want to ask you, what do you think in that case? Are we here? Are we with the weekly or against? Weekly was bullish, I remind you. Of course with, so we are looking for the buys. What do you think here? Are we with or against? With, so we are looking for the buys. What do we do in that case? Here. Are we with or against? Against. Weekly is bullish, daily is bearish, ending cycle by itself. This is our time to be careful. How do we know we are going to be careful? We drop to 4 hour or 1 hour because daily is involved right now. And we ask ourselves the question, do we have false breaks and convergence or 3 waves down? That was 1 false break. That was 2nd false break. From this moment we got 1, 2, 3. 3 waves down. Once we got it, we know we are possible for bearish correction. So the daily gave us the signs to go against the weekly. Clear? If we have these signs, we can short term go against the weekly, because for long term we would still be waiting for this correction down and look for buys only, right? So we got these 2 waves down, we can start looking for possible buys. Now we might make money or not in this case. After that we got 2 more waves down, we might make or lose money here on the rallies, because we now want only rallies, because we are with the weekly, with the daily, both directions. But for us, the one picture is clear. We are ready for something big. Big doesn't mean necessarily it's going to happen on the first attempt or the second or the third. It could happen on any attempt as long as the weekly lows hold. But when it happens, it could be providing a huge move and opportunity. And this is exactly our chances. Where do we catch a big possible fish? For us, every opportunity in 2 waves down, we start looking for the buys. Not on every we can, not on every we will make big profits, but this is where we start. And how do we know if we're going for long term or short term? According to the question we ask ourselves, weekly and daily together or separately. And that's how we know if we are going on the way or not. What do we do if we don't have clear cycles? We rely on divergences. Divergence and cycles go hand by hand. So we don't want to go against divergence, right? We don't want. If the weekly is running to be like, let's say, pound Canadian or pound Aussie, doesn't matter which one you choose, right? So the weekly has a bearish divergence, daily has bearish divergence. We don't want to deal with buys here, even if we don't have any confirmation for cycle or anything like that. We want to be careful. We want to trade on clear conditions when we don't have the obstacles against us. When we do, it's time to be careful. Okay? So this is basically the entire principle of roadmap. And this is what I want you to remember and practice with yourself, always. Weekly, ending or developing. It always, well, it starts with ending if it's at the end of double or triple or special cycle, right? Then it could turn to be developing, and developing is a corrective. So if we had, like we saw, let's say here now, okay, double cycle up, daily double cycle up, 4 hour false breaks, right, and we start to be a corrective cycle. For lower lows, it will start to be a developing cycle, which means will take us lower according to the daily and weekly cycle corrections, right? So we are on developing cycle now, on the daily and the weekly, and we are on the corrective mode, correction to the rallying cycles we had. It is complicated at the beginning. Once you practice that, you go over that, you put these pieces of the puzzle together, the logic hits you and you start to see the full picture much clearer and cleaner. And then there is what I call the 3 steps trading. Always ask yourself: level, confirmation, setup. When you have the 3, you have the best possible trade. It's not a guarantee it's gonna end with profit, but it is a guarantee that you have the best starting point for your trade. Level means cycles. The way we measure cycles. I'm not going to do it here. You have the cycles webinars for that, to learn all that, okay? But if we have the level that comes from cycles, perfect. Confirmation, that comes with divergence, false breaks, right? Trend lines, all the confirmations we have. And a setup comes with false break and convergence, or 3 waves in a move, 2 waves correction, breakout. That's the only possible ways for us. Now, what do we do in such cases like here? This is a possible range. So we had a double cycle down, a false break on the bottom, a false break on the top. Ooh, and we are on a range. What do we do right now? Range, as I said before, always is an ending or developing cycle by itself. Now ask yourself, this range came where? At the end of a double cycle, which means we are still preferably looking for buys. Exactly. Every drop down, we need to buy. We're looking for buys. Okay? That's what we do, preferably. Right? We still can go and try to look for sells at the top of the range, but we must remember that this cycle could be corrected. Now in that case it was corrected to 38.2, but the range could be lower than 38.2, and that's why it could push higher, and that's why we preferably are looking for buys. How do we look for buys in that case? We are looking for 2 waves down on the daily or the 4-hour chart. We got 2 waves down right here. We start looking for the buys. In that case, we could maybe make some money here. We could maybe make some money here. We will certainly make some money here. And that's what I say. It's not about how accurate you would be. You could miss 1, 2, 3, 4 times. Once it comes. And it pays big. It pays full. And that's all. Every 2 waves down, we start looking for the buys. And then think about it. Right from this top, every 2 waves down, we are looking for the possible buys. That was 2 waves down, ending bullish divergence. We start looking for the buys. We have our chance to make these profits until we start to get opposite signs against us, like bearish divergence. 2 waves down, 1, 2, which was developing a bit further down, and we can start looking for again possible buys from the, let's say, valid trend and breakout, right? And all this rally we could possibly enjoy from the buys until we start to get opposite signs against us. 2 waves down, 1, 2, and we can start looking for the buys and possibly make the money. Not big, but still profitable, because our first target is always from the first relevant target. So here, every time the 38.2, right? From the current target, that we measure. And then once it hits big, 1, 2, it hits it big, breaking this trend line, and here we go, we fly to the upside. 1, here we go, and that 2 waves correction, 1, 2, breakout continuation, 1, 2, breakout continuation, 1, 2, breakout continuation, 1, 2, breakout continuation, and so on, until it reaches our target. In that case, top of the range. Okay, and this is what we do. Ask yourself, where is my weekly? Ending or developing? Daily, with or against? And according to that, you know to make your decisions. This is the most important roadmap for you to understand it. It is basically much simpler than anything else. You need to stop for every step of your analysis and ask yourself this question: where am I in weekly? Ending or developing? Ending or developing. Now there could be situations like, let's say, dollar yen right now. Where are we? Here. What do we have according to weekly? Ending, developing. What do we have? Sometimes there will be no answers because let's say this was a special cycle, right? With a correction. So we expected to reach 38 to 50 of this entire move. It did reach both. So what's now? What's now? And that's situations where the read is not clear. And if it's not clear, avoid it. There is nothing for the long term yet. It could be any of both. So we go for daily. So if you don't have the answer, clear answer for the weekly, if it's not developing, not ending, somewhere in the middle, making something, right? Move on. You don't want to deal with this pair on the weekly. So it's ending or developing. According to that, you know what's your next question. Do I have the divergence? Do I have false breaks, convergence? Classical. Let's go to daily. Daily with me or against me? With the weekly direction or against the weekly direction? With, perfect. Look for setups with huge confidence. Your chances are the top class. Against the weekly, careful. Short-term trading only. Look for false break, convergence against the weekly and apply conservative trading, which means lower risk because you are against the weekly, so you want lower risk, right? And that's what we do. That's the only things we do in that cases. And then you ask yourself your questions. Do I have a level, confirmation, setup? Practice this. Level, confirmation, setup. Level from the cycle, confirmation, divergence, false break, trend lines. Psychological level, candle patterns, all that kind of confirmation we have. Setup is false break, convergence, or 3-wave in the direction, 2 waves correction, breakout. That's how we get the momentum. Setup means momentumal in the direction you want to trade. Okay, let's take a look a bit on more examples. Okay, Euro Aussie, for example. Weekly cycle was a range. It is a range, right? Here. Falls back on the top, falls back on the bottom. Now the question is where the range comes. Range came at the end of, well, this cycle. Which means the range is now ending cycle, right? Maybe it's developing on something new, but for us it's ending. Since it was versus this cycle, which it means for us we are looking for corrections down. For us the sell is the better. So every time we have 2 waves to the upside, above the middle of the range, on the weekly or the daily chart, we want to go for sells, or the 4-hour chart, of course, right? 2 waves and we want to sell, right? If we have the confirmations for that. Daily, every 2 waves, we are looking for possible sells. So we drop for that to 4-hour chart and a 1-hour chart, and we ask ourselves the question, do we have false breaks and convergence? If the answer is yes, we do, we start looking for possible sell setups because we are now with the weekly direction. And here we got 2 false breaks and convergence, which means sell the rallies. Okay? And no, sometimes we could miss this move. Sometimes here, maybe we can't even make money. Here we maybe even can't make money. So in the best case, we will end up as break even. But once it happens, this is where we can start looking and make big money. And it will happen when the weekly and the daily match. This weekly double cycle was ending around the 159. Once we got closer and the daily chart was a triple cycle by itself, that's where it became classical, perfect, and reliable. And this is why, from this moment, we get the sells. That's the entire theory, the Bible of cycles. That's what we do. That's how we define. That's how we trade the cycles. Same with the New Zealandian dollar. We define that weekly is in a range. How do we know that? It was a triple cycle up, falls back on the top, falls back on the bottom. Possible cycle for range. Daily, so we want the bottoms to be buy, right? Daily was giving us 161.8 of this right there. And not just that, the second leg is giving us triple. So we know we are after buys. Right? We know we are after buys. Game is over. We start looking for fallbacks and convergences, 4-hour chart or 1-hour chart. If we don't have fallback and convergences, what we are looking to do? Triple double. Right? 3 cycle up, 2 cycle down, and we are looking for the buys. 1, 2, 3, 1, 2. That's all. Once we got it, sorry, that was the 1, 2. Once we got it, we start looking for buys only. And that's all. There is no different theory. There is nothing else we do, should do, or have any reason to get confused with. It's much simpler than we as traders tend to think. We always, so, have to stop for a second and ask ourselves the questions. Why do we ask ourselves the questions? In order to be able to get a clear answer. That's all. Okay? So, my dear friends, that's the roadmap of cycles. Me and my team started to develop some easier to use roadmap tools. If we will manage to complete and create that, we will share, of course, in the community, in the club, and so it's easier for everyone to get the read. But that's what I wanted you to hear, to know, and to start to apply. It is complicated in the beginning. Once you start move and in the direction, in the progress, you see that, you feel that, you recognize that. That's where the things become much clearer, and that's where your trading starts to be much more accurate, correct, and professional. And according to that, more profitable. Thank you very much for watching this video. I hope this video contributes you as I expected it to be. I hope it clarified few things. Most likely you will have some questions now, some doubts which are normal, some confusion which is normal. Don't keep it in yourself. Come ask us the questions. I'll be more than glad to answer you. And of course, in the live trading rooms, we cover that on the daily basis. So I hope it's beneficial for you. Your comments and feedback would be more than welcome, of course. And once again, thank you for watching, and I wish you only the best. Yours, Vladimir Ribakov.